So today I want us to go through something called transaction monitoring. So transaction monitoring is a control that financial institutions use to ensure or to detect. It's a detective control that can help banks know or be able to trace AML or money laundering activity that is in their systems. So it's normally based on a few kind of monitoring rules. For example, we have risk targeting, where in our previous class or the previous lesson, we understood about know your customer. So here you are able to do risk targeting based on geographical location, the industry the client is from, and like the habits, the behaviors of the client. And based on this, you can be able to detect AML. For example, a client, for example, who is in an industry like firearms, he does procurement, he does supplies of firearms. So that such a client can be at a higher risk of money laundering, because firearms is, if used in a wrong way, can be easily used in or criminal offenses. So such a client can be at a higher risk target than a client just having an account and he works, is a school teacher. That one has no big risk than this other one, which we talked about, the enhanced due diligence and customer due diligence before. So we also have something called threshold, where you give different clients different thresholds, and if these thresholds are met, it means you can get an alert, and you can work on that alert in terms of understanding, is these activities that are happening within this account, can they be connected to AML? From there, we also have velocity transactions. So if, for example, a client based on his risk profile or customer profile, he doesn't do a lot of huge transactions or large transfers and large amounts of domination of money, and at one instance it happens that there is a high velocity. That means high amount of transaction, high amount of money of transaction, and also the number of transactions that are happening are at a higher level than before. This can give you an indication, maybe this can be a money laundering scheme that is happening. For example, also a client does different, there's something called scenario-based rules or monitoring, where you are able, there's something called structuring, where you structure, the client can structure deposits of money to the account based on making those deposits in different branches. This can also trigger based even on the amount of money that is being deposited. This is called structuring, and it can also be an aspect of, or can help also to detect or prevent money laundering to happen. Yeah, so those are a few aspects I've spoken about. We have risk targeting, you have threshold rules. You also have velocity transactions, and also you have scenario-based transactions. So scenario-based rules. So from there, you are able to, in case you find a client has such, for example, like currently we have automated AML where the software can be able to do detect real-time alerts on some anomalies or some difference differences based on like the normal, out of the norm, something that has happened. It's easy for the system now to do it, and the most of the AML, the automated systems, they can also do even a report or can give you a description of the what is happening, what might be the problem, and then you can do an investigation of that specific alert. So that's part of transaction monitoring, because now based on the alerts you are able to know if or you can be able to detect money laundering schemes that are happening within your institution or within your bank. Yeah. So, and also one thing I want to add on is for a good software system, is a software system for AML monitoring. It should not have high number of false positives or higher number of alerts like at a go. Like it means it's not able to detect the real issues within the system. So the system should have less false positives and less false negatives. Yes. So you can fine tune so that it can be able to detect the real scenarios of AML within the system.